Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Now let's take a look at the gold market. Compared to the euro currency on the gold market, we do not have really big shifts. So everything in general stands with our expectation. And as last week in our weekly research, we said that probably the market should show another $5 rally to the upside to just complete the targets that stand on the daily chart and to reach the weekly resistance. And last week this really has happened. On Friday, as you could see, this spike up. This market simultaneously has completed targets and has reached an important resistance area. So as we already approximately for the 2 weeks we talk on the path for retracement down. That's all conditions have been met for this retracement. In the coming 1-2 weeks, we probably will watch for this retracement in progress. So probably it will start on the next week, but based on the picture that we have on the weekly chart, it really could be a bit extended in time. So although we have discussed recently that nearest target stands rather close, it's approximately 1240, 12 even area, but this is targets on the daily chart. Weekly chart suggests that retracement could be a bit deeper to the 1180, 1190 area. And as a result, we could really get the big reversal pattern on the weekly chart if this retracement really will reach this area. That's why this will be really important. So now it's a major question whether to trade this retracement down or not. Based on the current approach to the markets, guys, since we mostly prepare the daily videos and daily updates, we can't recommend you to do this. In the current environment with the strong bullish sentiment in the market, this will be a really nervous journey and really could be not safe to trade gold market right now on the short side. Besides, we will have the Fed meeting in the coming week, and this really could bring some surprises. And if you will take the short positions, this really could make you nervous. That's why our assessment, our thought on the current situation is better to sit on the hands and wait when the market will reach the proper moment for taking the long position, and put all your energy and diligence right to the moment of the entry on the long side of the market. This is more important than trying to catch even $20 per contract in downside action, because action to the downside could be really very volatile with a lot of pullbacks or unstable, and we could even guarantee that this action will be gradual and will meet our expectations. So right now market mechanics suggest that market should reach this area, but what will happen in the reality in the current bullish sentiment, it's very difficult to say. This is too many issues exist right now that could impact on the market and could bring uncertainty. This chip policy, some financial situation in the global economy, in particular in the United States, Europe, Japan, and so on. So this really is gold right now very sensitive to any events that could support the bullish rally. That's why we think that it doesn't worth it to trade it right now on the short side. Still, in the current week, we probably most time will dedicate to the bearish action on the gold market, because on the bullish degree, the bullish patterns and the trend stands in the larger scale, mostly right now on the weekly. But on the daily, as market will start retracement, we will have to talk on the bearish side, because market will start to move down. That's why difficult will be to talk on to say something new on the bullish perspective. And mostly we will try to estimate. We will try to find the patterns. We will try to estimate the patterns that could point us the final destination of the retracement. As usually we do when we trying to estimate where real moment for long entry could appear. That's probably what we will do on the gold market in the nearest week. So if you still will decide to trade it on the bearish side, you could do this, but because theoretically from the technical point of view, you have the reasons for that. Market stands at a strong weekly resistance and weekly overbought. Market has completed reversal pattern, so it confirms the strong resistance on the weekly chart by the reversal pattern on the daily, because we have the butterfly. Butterfly is a reversal pattern. We have multiple grabbers that have been formed here. Take a look. That grabber has been formed later. This one on the Friday has been formed, and that suggests further, at least minor downward action. Also, guys, if you will plot here the MACD, simple MACD indicator, you will get the bearish divergence here as well. That's why, from the technical point of view, you have the reasons for trading short. We just appeal to overall bullish sentiment, and that this trading on the bearish side could take a bit not quite typical behavior, so let's call it in this manner, that it could get if market was not as bullish as it stands right now. So that's why it just brings additional risk. But technically, we have the patterns, we have the reasons for possible taking the short position here. So the first destination point on the downward action probably will be somewhere around 1220 area. So this is confidence support on the daily chart. You can see this will be the daily oversold. That will be the first area to watch for. Later, market could turn to some kind of the hand and shoulders pattern, guys. For example, the market will drop to 1196. It could form some kind of the head and shoulders and then take the compounded A, B, C, D retracement down. So this is also possible. It's one of the scenarios that could appear. That's why we mostly tell that retracement could be really extended in time. It could take the 1-2 weeks or even greater to the downside. Maybe it will not be a very significant scale to the downside, but in term, if we will take a look at the time of this retracement, it really could be for some weeks. Initially, guys, also, right, the last moment here, I would like to return back to the discussion of the double repo pattern that we have discussed some time ago. So I think that we should not rely on this pattern for possible taking the short position. Yes, we have thrust up, we have closed below the 3x3. I don't have the 3x3 on this chart, but if you will plot it, you'll see it. We have closed below, second top, again, second close below, but here, guys, is true significant distance between the tops. It's too much time have been passed. So this standing between the tops is almost could be compared with the thrust. Number of bars inside the thrust and number of bars between the tops are almost equal. That makes double repo very weak. Besides, market has hit the trade support here, and the difference between the tops also is a bit significant. So that's why I think that we can't rely anymore on the double repo pattern. Maximum that we could get from it, just maybe you could treat it as the double repo look like, but this is the maximum that we could get. So personally, guys, I wouldn't rely on this pattern if I would plan the trading short here. So I probably would base my trading plan on the different patterns. So on the hourly chart, guys, the pattern that is most obvious here is the double top. As you can see, first top, second top. It's also wash and rinse of this first one. It's very typical for the double top pattern. I do not see any other patterns here right now on the hourly chart. So if you would like to take the short, you probably could watch for 1260 area. This will be the weekly pivot point and the fib level. So currently I can't say really something more. So the target of this double bottom is approximately 1190 area. So this will lead us to the weekly support area. We do not talk it in this video about it, but if we will read our weekly research and the update on the weekly chart, so you will see that 1190 is the really strong support, and this is probably the minimum level that market should reach on this retracement. So that's why currently on the daily we have the butterfly, on the hourly chart we have some kind of the double top pattern that's forming still, and Market hasn't reached yet the neckline here. So on this way down, you probably could try to take some bearish position on the minor retracement here. But this is only for those who still would like to trade short. Personally, guys, I will not trade it short. I will not take the short position currently on the gold market. But despite that, we call you to skip this trading on the short side of the market. The coming daily videos probably still will be dedicated to the bearish action in the gold market. Some kind of a paradox, but this is just how market moves, and we will follow the market. So that's probably all, guys, for today from the gold market. Let's see what will happen, and what's really will be interesting, what impact the Fed meeting will bring on the gold market.